What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about one stock that has been doing really well over the last couple months. It is up on a year-to-date basis. In fact, it has outperformed the market. It is up over 67% so far year-to-date in 2023. And it is actually one of my favorite companies. And the only thing I was waiting for is profitability. I've actually experienced their service quite a few times, so I'm going to break this down. As always, if you enjoyed this video, find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the members only private videos, and of course being able to join our Discord and get access to all the trade alerts, trade ideas, buy and sell alerts, options alerts. Everything's going to be included, as well as the Excel spreadsheets and members only videos that you can also access as well. And definitely do connect with me on Instagram. My handle is going to be CAS@WRP. I do post a lot of interesting stories, portfolio updates, P&Ls, and of course polls and strategies and videos over there as well. So link's going to be down below. Love to have you on board. So I've actually done a video on this before, and the company is going to be Airbnb, and Airbnb is going to now be included in the S&P 500 because they have shown very nice consistent profitability over the last several quarters. And as we know, Airbnb is essentially a marketplace for buyers and sellers to come together for hosting experiences and of course hosting actual places to stay. So unique stay experiences, adventures, and more. From cozy cottages to elegant penthouses, hosts are happy to share their places. Whether it's a work trip, weekend getaway, family vacation, or a longer stay, there are millions of amazing places to visit, and I've experienced this firsthand how amazing Airbnbs can be, both on the stays and also experiences. I've experienced actual social events through Airbnbs when I'm traveling solo, when I'm actually going to all these amazing places. I have booked Airbnb experiences which have been absolutely fantastic. I've done that in Switzerland, I've done that in Italy, I've done that in London, I've done that in the US, done that in Malaysia, lots of other places. The experience has always been absolutely fantastic, and I think it's also one of the most underrated things for people because you know in the earlier times what we used to do was, even if it's a family vacation, I've actually done that in Dubai as well with all my family. And what we used to do was we used to book all these packages, right? There were a lot of these packages where you can go on all these adventures and experiences. But now with Airbnb, there's very tailored, unique, private experiences that you can go on. And they actually have a lot of value, in my opinion, and continue to be very underrated, in my opinion, as well. So this right here is the stock performance. So it hasn't really performed as well. So it has pulled back since 2020. Of course, over the last 3 years, Airbnb stock has underperformed the market. And this right here is going to be the most recent quarterly report as of the third quarter 2023. Revenues was up to $3.4 billion, up 18% year over year. Net income coming in at $4.4 billion, which also does include a one-time income tax benefit of $2.8 billion. So that, of course, is being accounted for. So you got to take that out. And adjusted net income was $1.6 billion, and margin was about 47%. Which again is incredibly good. And adjusted EBITDA was up 26% year over year to $1.8 billion, and free cash flows were up over $958 million since third quarter 2022, and up to $1.3 billion, and margins were 44%. This right here is GBV, gross booking values, of over $18 billion, up 17% year over year. And nights and experiences booked over 113.2 million. That's up 14% year over year. So definitely a very, very global company with massive scale and massive size in terms of their businesses. This right here is quarterly revenue up 18% on a year-over-year basis, just coming in at just under $3.4 billion as we looked at earlier, and quarterly net income $1.6 billion once you account for the adjustments, and adjusted EBITDA just over $1.8 billion, up 54% on a year-over-year basis, and free cash flow sitting at just over $1.3 billion. And of course we've got margins, trailing 12 months free cash flows sitting at over $4.2 billion. Now if you take into account $4.2 billion, we do some very rough estimates because Airbnb right now is a company worth about $95 billion. So 95 divided by 4.5, we're looking at a price to free cash flow of 21. So even at this market cap, this valuation, I would argue that Airbnb actually makes for a pretty reasonable sort of a pricing. 21 times earnings, free cash flow multiple is actually not bad, because if you do 1 divided by 21, we're looking at a 4.76% in free cash flow yield for the company, which again is actually quite good. This right here is the shares outstanding, which has been going down over the last couple of years. The company has bought back shares from 702 million down to 681 million shares. And for the fourth quarter of 2023, they expect to deliver revenues between $2.13 to $2.17 billion. And this represents year-over-year growth of between 12 to 14%, which is relatively stable growth compared to the third quarter of 2023, excluding the impact of foreign exchange. And third quarter was, of course, a record-breaking summer travel season for our business, is what they mentioned. And we are seeing greater volatility earlier in the 2024 and, of course, in the fourth quarter as well, as they are closely monitoring macroeconomic trends and geopolitical conflicts and tensions. And, of course, interest rates, if they are expected to come down, that's going to loosen up a little bit of that credit availability in the world, which obviously is going to lead to potentially more travel all over the world, which is going to lead to more bookings and more experiences and more stays for Airbnb as well, because I am planning to also travel a lot more in 2024, as I'm sure many people would be planning on doing that. As interest rates continue to come down, it's going to be a little bit more easier for people. Now, this right here is going to be their market opportunity. So they have a substantial market opportunity in a growing travel and experience economy. We estimate that the serviceable addressable market, or SAM, today to be $1.5 trillion, including $1.2 trillion for short-term stays and $239 billion for experiences. And we estimate our total addressable market, so total TAM, to be $3.4 trillion, including $1.8 trillion of short-term stays, $210 billion of long-term stays, and $1.4 trillion for experiences. I think the experiences is really, really undertapped. This right here is where big opportunity is going to come for Airbnb. Again, coming from first-hand experience myself, I have loved all my experiences on Airbnb, every single one of them that I've had, whether it's, tours and different activities, outdoor activities, indoor activities. I've absolutely loved every experience that I've had on Airbnb, and I think this is where a lot of the opportunity comes in. Now, if you take a look at the revenues, very nice consistent growth, going from 2.5 billion to almost $10 billion, and gross profits gone from 1.9 to over 7.9, almost $8 billion. And of course, operating income is now turning the corner towards profitability, as you can see, $2.2 billion on a trailing 12-month basis. And net income also now turning the corner, 5.4 billion, but of course 2.4, 2.8 is a one-time tax allowance gain, so we got to take that out. But nonetheless, the company's turning the corner towards profitability, and of course is now included in the S&P 500 as well. Excellent balance sheet. So we're looking at almost $11 billion of cash, with total debt sitting at $2.3 billion. So net debt sitting at negative $8.6 billion for the company. So, of course, the company's got a lot more cash compared to debt on the balance sheet, and current ratio, quick ratio, is a little bit over 1. And we've got a long-term sort of debt to free cash flow sitting at 4.28. So obviously, that doesn't really matter much, because the company does have more cash than debt on the balance sheet as well. Valuation is reasonable, like I said and calculated earlier, 21 times cash flow. Enterprise value to EBITDA is sitting at over 23 on a forward basis. Price to sales a little bit under 10, and price to earnings is sitting at just over 17 at the moment. So again, it does make for a very reasonable to low valuation with excellent margins. And we're looking at gross margins over 82%. We got EBITDA margins 23%, net margins 56%, although this number may not be totally accurate considering the one-time gain. Free cash flow margins almost 30%, and we got very nice return on capital, equity, and assets. Again, these numbers may not be completely accurate considering the sizable outsized net income that we're seeing for the company. This right here is going to be the earnings expectations. They are expected to grow EPS from $8.33 all the way to over $14 per share for Airbnb. And from my previous analysis on the company, my fair value has not changed for the business, which I believe was in the low 100s to sub $100 for Airbnb as well. And of course, since $82 since December of last year, the stock is up over 77%. So we continue to see a lot of consolidation sideways. What I would suggest for Airbnb right now is a lot of resistance here at 154, big support sitting at 104, all the way down to $81 per share. And this right here has been the slow and steady increase in the stock price, with a very nice consistent higher high and higher low. So a little bit of an uptrending channel within which it's been trading at the moment. So very important resistance that it's coming up to now, $154. In case we get a breakout above this level, then of course we'll be watching the all-time highs at $217 per share. But I would be a lot more interested to essentially pick up pick up Airbnb in this area, so inside this green rectangle, I would be a lot more interested in picking more shares up, or basically starting a new position in Airbnb at those prices in that range between $80 and $100 per share. So let me know your thoughts down in the comment section below. I do believe Airbnb has a lot of potential long term. It's got a very significant market that it's tapping into, and there is some things, right? Experiences, short-term stays more specifically, because nowadays people are traveling so much. There's a lot of globalization, work travel, fun travel, leisure. There's so much that's happening that there is going to be more and more demand for Airbnb and experiences and stays, in my opinion, moving forward. So let me know your thoughts down in the comment section below. And of course, there's going to be the other side of the story where a lot of people may not have had the best experiences staying with Airbnb because of the hosts, because of the party culture, because of a lot of different things. But in my experience, what I have noticed and encountered is all very, very top tier experiences. There's only been one time in Dubai that I had problems, and Airbnb's customer support was absolutely fantastic in solving and resolving that issue fairly quickly. And of course, siding with the customer, siding with the buyer as opposed to the host and the seller as well. So let me know your thoughts down in the comment section below. As always, if you enjoyed it, found it helpful, make sure that you drop a like, and of course subscribe to the channel. Definitely do check out the links down below for our Instagram handle is going to be CasWRP, and definitely do check out the Patreon and the Discord links down below if you want to be a part of our MoneyVest community. As always, happy investing, and I'll see you all in the next video.